Welcome, everyone. You're joining us for a panel discussion on proactively combating financial crimes. We're here to discuss that ever-evolving financial crime threats nations and banking participants need to stay ahead of. And we will also be getting into the latest innovations that can help prevent global and locally organized crime within banking ecosystem and protect people as well as enterprises. I'm Sukhmani Dev, your moderator, and I'm the VP of Digital Payments and Cybersecurity Solutions at Mastercard Canada. And with me, a panel of esteemed panelists who I'd asked to introduce themselves, starting with David Rich. David is the EVP, Vocal Link Services and Analytics, Cybersecurity and Intelligence Solutions, Mastercard. David, welcome.
Thank you. Yes, I've been, thank you for the introduction. I've been with Mastercard for a bit over 8 years now, and mostly during that time, I've focused on analytics, in particular, real-time payments, batch payments, and the analytics around mitigating financial crime in its various forms.
Our second panelist today is Jason Costain, Head of Fraud Prevention at NatWest Group. Welcome, Jason.
Hi, thank you. It's good to be here. So, and I've worked in fraud for probably going on for 20 years or more in various UK banks. I've worked for NatWest Bank for the last 5 years.
Awesome. We're delighted to have you. And last but not the least, Peter Dodic, Chief Risk Officer at Payments Canada. Welcome, Peter.
Thanks, Sukhmani. Afternoon, folks. My name is Peter Dodic. I'm the Chief Risk Officer at Payments Canada. Payments Canada, for those of you that are not aware, owns and operates Canada's national payment clearing and settlement infrastructure. So to give you an idea of that scope, last year we cleared and settled over 8 billion transactions, or around 220 billion Canadian dollars each business day. So as CRO, I lead the risk function, but in addition to that, I also lead the compliance and internal audit functions. I've been with PayCan now for almost 3 years. And before that, I spent 15 years at a large Canadian bank where I worked in corporate development, corporate finance, and enterprise risk. And in a former life, I worked as an engineer in the BC forest industry. So thanks for having me on.
Wonderful. Thank you for joining us. Awesome. So exciting topic ahead of us today, and let's get into it. According to estimates, I'll just start easy, almost $5.8 trillion the value of financial crime globally, and that's almost tripled in the last 10 years. So these are massive numbers, and they continue to climb. Even during last year, we've seen a marked increase in financial crime, mainly fraud targeted at people and businesses. So let's just start with, what is the biggest challenge today when it comes to combating financial crime in its many forms? David, maybe we can start with you.
Sure. There's a lot of different aspects to this. When we look at the speed with which these criminals move, it's quite phenomenal. And the speed is not just the ability to move funds away from a fraud or from an event through the banking system and then out. It's also the speed at which they can pivot and attack things that were strong, became weak, or that are newly added to the system, and have a vulnerability. They find out about the vulnerability and then they attack it in a coordinated manner, which makes it really complicated for people like us to try and identify it and stop it in near real time, or at all in a lot of different cases. That's one aspect. Another aspect is with the growing things in the Internet of Things that are connected and interconnected, that are also interconnecting into the payment systems as well, becomes another sort of aspect that we need to understand from a cyber risk perspective as we move into real-time payments, the ability to move funds very quickly and effectively out of the banking system into crypto exchanges or into over-the-counter or wherever the money sort of goes in the end. The opportunities and the pathways to do that just proliferate, and it becomes much harder to identify, trace, and mitigate. So they are all different areas. And then the last thing is, well, there's more than 3 or 4 things, but another key aspect is the sophistication. So not only do they pivot really quickly, they're very successful in identifying vulnerabilities, but they're just as adept at applying very sophisticated artificial intelligence, machine learning algorithms, cloud-based computing APIs, they have as much access to the technology as we do. They're less scrupulous about everything. And so they don't really adhere to any rules, of course, because they're criminals. And as a result of that, they can make a lot of shortcuts, and they can be very agile, and they can use the latest technology. So that are some of the challenges that we as an industry face in trying to mitigate crime.
Yeah, that's definitely there. Peter, anything to add?
Yeah, thanks for the question. Just building a little bit on what David shared. I think, you mentioned results of advances in tech. And if you look at the interconnections of global systems, right, financial crime now looks to have, undefined geographies, right, and just more opportunity for innovation. And if you look at the global nature of financial crime now, I think its scale and impact almost knows no bounds. I think another challenge relates maybe to having less regulatory oversight in the increasing number of folks in the payment space. And I think this could have the effect of maybe some of those firms having ineffective financial crimes related technologies or mitigants due to that lack of oversight. If you look at tech like blockchain, digital currencies, one of the many coin offerings, they continue to surge in popularity without consistent or standardized rules or regulations, with little to no oversight. And I think we should be honest about the challenges for law enforcement, right, related to financial crime. Tracking down these sophisticated criminals, and there's sometimes state actors. There's a difficulty in coordinating amongst law enforcement agencies, amongst jurisdictions. And I think the need for experienced personnel to gather evidence, to investigate, and to prosecute is a huge challenge for everybody. So, Sukhmani, if you think about, really, there's a myriad of issues here, right? From the global nature of financial crime, from regulatory issues to policing, to the inherent risks of things like the tech with crypto.
Absolutely, definitely a complex problem. Jason, anything to add to close this one off?
I totally agree with the point made. I think, I guess, just one thing worth pointing out, and I would suggest that this is probably true of any, developed nation economy now, but in the UK, fraud is now the #1 type of crime. So you're more likely to be a victim of fraud than anything else. So I think I see law enforcement being ill-equipped to deal with the kind of the cross-border nature and this level of technical sophistication that criminals use. So I'd say getting fraud up the political agenda is important. It needs to become a policing priority, but it needs to be a political priority probably prior to that. And ultimately, we all know it causes a huge amount of harm to society. So as a bank, we're trying to sort of encourage that debate in the UK. And even over the weekend, there were articles. We've had real-time payments in the UK, peer-to-peer domestic payments, for about more than 10 years. Mm-hmm. And that combined with access to banking and high functionality for consumers to send payments anytime of the day or night means that we've created the ideal ecosystem for criminals to exploit. And there's talk in the newspapers this weekend about whether real-time payments is actually a good thing or not. So it's kind of coming full circle now, and I think we really need to get as a community working together more effectively, and see our lawmakers driving that as well.
Wow, that's quite something. What a interesting thought. And so maybe you've all sort of started the dialogue already around, what could be done about it in your answers, but let's maybe hone into that a little bit and talk about, we've talked about a few things. We've talked about regulation, we've talked about collaboration, and I want to double click on the collaboration aspect of it. So what is the value of industry network level collaboration and innovation when it comes to combating this challenge? And Peter, maybe we can start with you, and Jason, would love your thoughts after that.
Yeah, I think that's a great question, and I think it's one area where we all hope to maybe turn the tide a bit here. I think of this maybe through a couple lenses, maybe external and internal. If I start with the external piece, industry and network level collaboration is really essential in order to, I think, comprehensively understand and combat financial crime, right? So a key component here, maybe a primary driver, would be sharing financial crime data. in order for organizations to build holistic models and profiles, right? With criminals continually innovating, I think organizations must leverage internal and external information as much as possible in order to continually monitor for crimes such as fraud and money laundering. So this is the scheme of cat and mouse, right? On the other hand, I think internally, it means firms being better able to understand customers, maybe understand a customer's behavior, right? So if you look at industry and network level collaboration, I think it will enable firms to identify, maybe flag unusual behavior more accurately. I think this could maybe lead to, as a next step, the ID or even stopping of the crime. So kind of in summary, my sense is really innovation and collaboration is likely the only way that we can rise to this challenge, I think.
Jason, go ahead.
Yeah, I think Peter's spot on. In the UK, we've had a national fraud database, and for many years, and it's proved invaluable to sharing intel. I know it's not the same in lots of different territories, but really that data sharing of fraudsters, details, device details, latest trends, it's all invaluable. And actually, from a big data perspective, that's how to get better at this. And I know Mastercard have acquired Vocalink, who run the payment rails in the UK for faster payments, and the insight that's provided. We were one of the pilot members looking at the data flows, and the insight that's provided has been phenomenal. So a victim of a fraud with us, £19,000 was sent, and I think within an hour and a half, from the network analysis that Vocalink Mastercard were able to give us, we saw that payment break immediately to 4 or 5 beneficiary accounts across, I think it was 4 different banks in the UK. So the payment value broke down, the banks was different, and then over the period of following sort of 60 minutes, that payment hit about was broken down further, and it ultimately, I think 18 or 19 different accounts were involved, including some accounts held back with us. So the money had left the organization, but some of it had come back. Now that's a massive amount of sophistication, speed, and network that the criminals have to launder the proceeds of crime. And ultimately, law enforcement would have to investigate every single one of those account holders to follow the trail if they were to succeed in prosecution. So I think that's probably unlikely to happen unless it's a big crime. But as banks, we can certainly do things to follow the money in an automated way and actually start to disrupt it.
You've made some very good points there. Complexity, speed, and how you can use things like big data and probably artificial intelligence as a role to play in there. And so, David, maybe I'll ask you this. So given the complexity and the speed with the movement, just like Jason described, how effective can technology be? And maybe you can, share a little bit about specific applications of artificial intelligence in the space.
Sure, and thanks, Jason, for the kind words. But it's good to see that the ability to apply artificial intelligence across transactions between accounts, between banks, is really the only effective way of doing it. So doing it as an individual bank it has a level of effectiveness. When we combine it with other sort of data from other banks, either directly in the payments industry, or as Jason was saying, with the fraud database, adding devices to it and IP addresses and phone numbers and MAC codes and whatever else, also enables us to provide signals or input those into algorithms that can output alerts that take those things into account. That is all created or enabled, I should say, through industry collaboration. So we see ourselves very much as industry collaborators to help fight financial crime, irrespective of any sort of other aspect. It's the overarching MO for the teams that are working on this in Mastercard and NatWest and in Payments Canada and elsewhere is to stop the crime, all right? And that does take collaboration. It also takes, to Peter's point, innovation, because we can't do the things today that we have done for the last 30 or 40 years. It doesn't work. You mentioned at the beginning that money laundering has increased to 5.7 trillion. That's nearly 7% of global GDP. up from about 2 trillion, nearly a decade ago, despite the increased regulatory oversights, despite the fines, despite the compliance costs that the banks have put in place to try and conform and ensure that they stop it. It's still growing and it's not stopping. And so applying a mix of that and having regulators enable and understand the need for innovation, as opposed to the need to ding banks for not doing something, they should be encouraging banks to work more closely together and payment systems operators in various markets to collaborate and enable these solutions. And the solutions themselves, provide very significant and clear incremental benefit in addition to what the banks are doing themselves. So we did a blind test with a number of banks recently on retail fraud, so authorized push payment type of fraud, scams and those sorts of things, where we saw nearly up to around about a 50% increase in detection value and rate detection. We know in our business fraud solutions, we are around 85 or so 90% accuracy in detecting. And then on various other statistics that Jason was referring to in terms of tracing the flow of illicit funds. We're also innovating in the sense of a lot of those illicit funds end in crypto exchanges. So we're starting to analyze how do we bridge the gap between the fiat currency and the crypto exchange and where it goes from that crypto exchange to other exchanges. We purchased a number of companies in New Data and Ethica and others to enable us to not just grow organically, but inorganically by bringing in other technologies to apply phone numbers, MAC addresses, IP addresses. If this phone number is being used for this fraud, maybe that phone number was used to open up other accounts. Maybe there's some intelligence we can gather there to help them, to become a bit more comprehensive. So there's a variety of clear benefits, and it's not going to go away because the real-time payments, 87% of the world's GDP is in markets with real-time payments. 33 or over 70 countries are moving to or have real-time payments. 56 are currently in real-time payments today. They're processing well over 70 billion last year in value, or 70 billion transactions rather, and 41% increase from the year before, 50 billion. And the value is 60 trillion, growing last year to $92 trillion. So that's, there's a very clear move in the world towards real-time payments, which enables a lot of fantastic use cases for consumers and businesses. So it has a lot of value, but we do need to recognize and collaborate in how to identify and stop the financial crime that can be, exacerbated by the quick flow of funds.
Right. So it sounds like there is hope, if I may put it that way, when you apply the right technology and there's the right level of collaboration between players. But let's maybe just double click on that, given the audience, and get a little bit more specific. And Peter, maybe I'll start with you here around, yes, $5.8 trillion, the value of financial crimes globally, 181 billion were just spent last year by financial institutions on compliance. So a lot of money is being spent. It sounds like we have some good technology solutions that could be applied, but very specifically, where can these new preventative solutions really make a difference? And, as you answer that question, maybe share a little bit about what role does Payments Canada see themselves playing? And then Jason, would love your thoughts on what role should banks play? So Peter, maybe.
Sure. If we just start for a second at the money piece, what a staggering amount of money. We're talking trillions of illicit fund, billions spent in mitigation. It's really staggering. If you look at the current state, at least in this jurisdiction, my sense is AML processes are known to be quite manual, right? So, customer due diligence, screening, transaction monitoring controls. I think currently they would typically generate high levels of false positive alerts, right? And this the kind of things that result in significant operational workload, such as due diligence, regulatory reporting. We really need kind of an evolution in technology in terms of getting to the next level. And if you think about, what we need in order to combat the evolution of crime in this age of technology, I think it's really important for organizations to leverage new tools, right? We're talking new tools, we're talking the cutting edge stuff like artificial intelligence, we're talking machine learning. The idea of leveraging big data for your KYC related processes to conduct really enhance the next level due diligence, right? My sense is that today AI offers immediate opportunities to reduce some of those operational efforts and costs that I just talked about around AML by introducing machine learning techniques at different levels of the transaction process, right? But beyond that, if we think about new solutions, new preventative solutions, I think there is new tech that will support proactive prevention of financial crime. So I think we're thinking things like biometrics, right? So measurement and analysis of unique physical or behavioral characteristics to support authentication. Of course, blockchain, right? Blockchain hopefully prevent or detect financial crime due to this unchangeable ledger of past transactions, right? So full transparency on the transaction list. AI, right? AI we could apply to KYC processes. You could use natural language processing. We could mine text to conduct enhanced due diligence on potential customers. I think there's a lot of technology that we can apply, and there's a lot of new tools that we can use here, I think, to help make a difference.
Truly.
If I was to go into kind of what role Payments Canada sees us playing, if you look at an FMI in Payments Canada, right, a huge part of our mandate is safety and soundness, right? So in essence, we work to ensure that risks are understood and that risk informs our decision making. So on one hand, Payments Canada is in a bit of a unique position, right? We're at the center of the ecosystem here in Canada. That center could see payments activity of all participants. Of course, currently we don't. There are limitations on how much data comes into our systems, and this serves as a pretty effective risk control for today's rails. But we only receive enough information to fulfill our obligations around clearing and settlement. But if you fast forward and if you think about ISO messages, they do carry much more data than our current ones do. And if in the future this data was to be received by the center, there would be additional value there, right? But there is some risk, and there is some risk associated with safeguarding that data. I think the risk of safeguarding the data is material, but I think it can be effectively mitigated. But on the other hand, if the center had this data, right, this could really open up a possibility, I think, of a more complete view of what is a really complex network of participants and a big network of transactions, right? So this could lead to the implementation of centralized systems for fraud, right? Detect fraud, predict pattern, find anomalies. The reward here would be, I think, an overall reduction in risk related to financial crimes. So, Sukhmani, if I look at it, from my perspective as an FMI, there's really two sides to the coin. There is some risk in getting more data we can mitigate, but there's even a greater reward, I think, on our side in terms of payments data, centralized fraud, and our role there going forward.
Indeed. And it does sound like the centralized fraud monitoring model has its merits. But Jason, would love to hear from you regarding your experience in the UK, because like you said, you've had the real-time rail for almost 10 years now. So sure, there's a lot we could learn.
Yeah, and I it's echo what both David and Peter have said. But ultimately, we're here to stop bad guys, and the teams that we have in the bank, are dedicated to that. And it's not just the fraud team's responsibility to keep customers safe; it's the entire organization's, because that's what banking is about. In the good old days, you probably assess the security of your bank by the thickness of the walls and the size of the vault. And nowadays you tend to forget that security is almost a hygiene factor, but it absolutely is. So, we as fraud teams in the UK have had to get on a real-time footing. So that means 24/7 fraud alerting capability, also an organized, centrally held portal for notifying other banks that when a fraudulent payment's gone to them, so they can block that account. We've also had to start looking at inwards payments. So we're now in a typical fraud defense system in the past, you'd have just looked at outbound payments. Now that defense system is going to be fed inwards coming payments, so you can see what's arrived into the accounts before you saw the payment leave. So you think about that, that is effectively creating a real-time transaction monitoring capability that's previously existed in AML transaction monitoring teams. Probably you'd have asked those teams, they'd have said it's for the purposes of fulfilling our regulatory obligations, and we might suspect money laundering. Well, we're actually using that data in real time now, and we've been highly successful in stopping payments flowing through the bank and preventing it falling into the hands of mules. You talked about cryptocurrency earlier. Crypto's become the currency of choice for organized crime. We see now I think a mule is more likely to use a crypto exchange than a standard beneficiary bank, something like 18 times more likely. So it's definitely the place that criminals want to move the money. But I'd say, yeah, a real-time footing. And then finally, I suppose the other point I'd make is fraud teams historically have said, when they speak to the customer about a suspicious transaction, is it you? Now the conversation has really evolved to, is it you, and what are you trying to do? Because when a customer's moving the money themselves, they're a victim of authorized push payment fraud. When we ask them, is it you? The first answer is going to be, yes, it is me sending money to, my solicitor. But then if you ask them, as the solicitor asked, how did they request the funds? Did they give you a new bank account and sort code number recently? Oh, yes, I got an email from them this morning. They asked me to do that. Okay, we think you're being a victim of a scam. So we're having to retrain our staff, as well as having created that real-time capability, but retrain our staff to have those conversations that are a lot more probing and helping keep our customers safe.
Those are some really compelling insights that we could learn a lot from ahead of our real-time rails launching next year. David, given LocalLink's experience around the world, what are some of the other learnings from other markets than the UK that you can share that we should be paying attention to at this point?
Yeah, I think Jason and Peter have made excellent points. In terms of proactive, reactive, when we first put our service back in 2018 into the UK with VocalLink to trace the illicit flow of funds, it was a reactive type service. We were advised by the banks that were involved to please look at this and trace the funds from that. Over the course of several years now, we've actually been able to constantly evolve those models so that we can predictively identify accounts or transactions for mules or mule transactions. We can also, Jason, the quote on, they're 18 times more likely to be fraud or money laundering if the endpoint in the banking system is crypto is a very on-point message, right? Because that's clearly an issue. But the proactive ability to do that is something that's enhanced through machine learning and artificial intelligence, which is very difficult to do manually. It's not really possible to do manually. And then, the other aspect in terms of false positives, absolutely have to keep false positives low. Otherwise, it becomes, there's a lot of fraud and money laundering going on that people aren't aware of. As our systems and collaborations become better at identifying and alerting, clearly we're going to identify more fraud and money laundering that's going through the networks. If that's associated with a higher incidence of false positives, that is going to be a real significant problem for everyone, because it's already a difficult situation for many banks in many countries around the world to monitor these and then to act on them with the suspicious activity report or whatever sort of aspect they've got to do to respond. So being able to not just have a high detection rate by transaction and value, but also having a low false positive rate is really critical. And we've seen our solutions being able to increase detection at either the same false positives or reduced false positives. Again, the machine learning aspect and constant feedback from the financial institutions and our customers and partners helps to then feed into the models. We were accurate, we were inaccurate. So next time we run a scenario or the machine learning in the background is calculating algorithms, then we can identify, oh, actually this type of behavior has been identified to us by our customers and partners as a problem. Therefore, this is likely to be a problem too. So those learnings are really critical, and we've seen that around the world. And then the last point is that the type of alerts that come out of an artificial intelligence machine learning algorithm are very different than a traditional rules-based approach that many, but not all banks follow, right? So a lot of banks will put in various operating capabilities and systems and software, and they'll say anything below $500 or, whatever the cutoff might be, we won't look at that right now. We're going to look at the larger value ones. I mean, every financial institution has a different methodology, but just use that one. What we've seen with the advent of machine learning and the artificial intelligence algorithms is a lot of these money laundering transactions are for very small amounts, 10 cents, 5p, 50p, whatever, and they are precursors to much larger amounts because the criminals are trying to figure out, is that bank, that dormant mule account still an active, valid account that I can use? And if it is, great. I will then transfer $20,000 in or £15,000 or whatever might happen, right? So, and I'll reuse the account for fraud or money laundering. So those type of alerts, when we started working with our partners and our customers, we're like, well, we don't look at 50-cent transactions. When we did further, collaborative analysis with them, it's like, well, actually, yeah, we probably do need to figure out how to queue that appropriately because that type of alert is valid for predicting potential future money flows, illicit money flows. So there's a lot of different learnings and a lot of different markets, but there's the constant theme, I guess, is if you're using AI and ML, which we need to do to keep pace, then the reaction to receiving those alerts needs to be looked at a bit differently than how otherwise we might look at identifying fraud and how to deal with it.
Yeah, which is quite interesting. I think you've all mentioned in various forms some retraining of the staff and the thinking around this whole problem is required to be successful. And another thing that I find is good when trying to solve a complex problem is to imagine the consequence or the desired end state. So maybe, Jason, maybe we'll start with you and then Peter follow on. Please feel free to add after. But by shutting down routes to launder funds for organized crime, what are the consequential benefits to the industry and society more generally? So Jason.
Well, I think that they're pretty well documented, to be honest. But I mean, I'll give you one very specific example and of a bank I saw that was really proactive. So what stuck in my mind, having spoken to an investigator in the FBI who'd worked in the Hamburg office immediately after 9/11, was that they were saying 80% of their investigative leads came from financial transactions and financial data. So it just goes to show you where law enforcement do go if they have the time, when they're trying to understand networks, criminal networks. And obviously we talked about organized crime, but we also need to talk about, terrorist financing here as well. So one bank I saw, a cashier submitted a SAR because a suspicious activity report into the head office because they'd seen a customer taking a large amount of US dollars and they'd mentioned they were going to Turkey. At the time, Turkey was an overland transit corridor for Islamic extremists to go and fight in the conflict in Syria for Islamic State. So the cashier had spotted that, and they just thought it was unusual actually that it was dollars to Turkey. So they reported it. The IML guy who got that report thought it was unusual, but he, rather than just closing it off, he put a diary note in for 4 months' time. When he looked at the account 4 months later, it had gone dormant. So that said, and there was also evidence of airline tickets having been bought. So it was clear that somebody had disappeared off the radar, having taken a large amount of dollars and said they were going to Turkey. They then diarised again, and a couple of months later, kept an eye on the account, and there was almost a breadcrumb trail of transactions, but the next transactions were in North Africa, I think Algeria or Tunisia. So that showed the person had somehow popped up in different part of Europe. A typical transit route as well, used by people returning from that conflict. And then the next transactions were in the UK. So at that point, the AML investigator was thinking, right, I'm going to do a disclosure to the National Crime Agency. This is a suspicious activity report. It's potentially terrorist financing. But what happened was they spoke to the fraud team, and typically money laundering and fraud teams operate in different parts of the firm sometimes in the UK. But what happened then was they used the card data that was in their card detection system to look at the transaction history of this suspect customer, and they found that there was another individual who had been in the same Lebanese restaurant in London at exactly the same time, exactly the same amount on the bill. So they clearly split the bill, having had lunch together. They submitted that report and that additional person to law enforcement, and the response was pretty immediate back, which is quite unusual from National Crime Agency, and it helped uncover a previously unknown, I guess, association of criminals and terrorists. So that's the power of data, and it doesn't necessarily need to be a FBI-led investigation or machine learning. That's just individuals using the data that exists in banks and putting it together. Our job, I think, as professionals is to try and do that in a more automated way. But the benefits to society are potentially huge. And I think we already do an awful lot, and a lot of money is being spent by banks, and it is actually having an effect. But I just think the appetite for criminals to launder money is vast and probably far bigger than the layperson understands. So we've more work to do, but we're definitely having an impact already, I think.
Clearly, such far-reaching consequences. Peter, anything to add?
Yeah, it's a good question, and really shutting down those routes is a pretty fantastic target state, right? Obviously several benefits to, I think, both industry and society, right? Jason mentioned it, that reduction in money laundering and fraud could help starve those criminal and terrorist organizations from their illicit funds, right? And if you look at geopolitics over the last 20 plus years, denying those organizations a source of funds is really a huge move in the right direction, right? So, we're talking global implications here. Maybe on a more local level, it could lead to a reduction in serious crime, maybe really move to protect individuals, communities, and society as a whole. If I look at the financial industry, right, reducing financial crime, I think would drive an increase in confidence, not only in Canada, but I think in the international financial system. And I think at maybe a more micro level, smart investments around data and automation, as was mentioned, really implementing those anti-crime solutions could result in, I think, improved and automated processes that would likely support a better, faster, and smoother customer experience. So we can work towards multiple wins at the same time. I would say plenty of benefits for both society and industry as we shut down these routes.
Absolutely. David, any other thoughts?
Yeah, I totally agree, right? So it's not just a matter of moving money quickly between banks in a market. It's also quickly moving money between markets, and that becomes a cross-border phenomenon. And that is a real, to Jason's point, that it's a much bigger problem than people realize. That's also very, very true. We see it from our cross-border services that we provide. We bought a company a while back called Transfast that we're integrating into our cross-border services beyond cards, but also to the account-to-account type of P2P, P2M type of payments that covers about 90% of the world's population in terms of access to that. And we can see, the deftness and ability to move that money is between borders is just as rife with, clever criminals as is in a market. The recent Wirecard fraud, significant tens of billions of that went to the Philippines. The Westpac AML fine that they received for about $20 billion worth of AML from Westpac in Australia went to the Philippines as well. It just so happens that we've been working with the Philippine payment systems operator, BankNet, to implement our services there in addition to other markets. And so one way of linking these things up is to see where funds leave a market that we're working with. For example, it could be PayUK and the financial institutions that we work with there, to a country like Philippines and other countries as we sort of evolve and stand them up, and learn about where they go in that country and vice versa, as well as being able to identify criminal behavioral patterns in one market to see if they're applicable in other markets. So there's a variety of benefits, and it can be done in near real time. We were recently having a conversation with some colleagues in Interpol, and they were describing a typical case where there was a lot of money being moved from one account to another, beneficial ownership. They were tracking it. They tracked it from parts of Western Europe into various places in Asia. It took them 2 weeks. They worked it out, where all the flows went and who got it. It took them 2 weeks to do that with collaboration from Interpol agencies and their respective partner agencies in various countries. Of course, by the time they found it, it was all gone, right? So we have to be careful, not just within a market, not just within a bank, between banks and within a market, but between markets. Again, a lot of the businesses and institutions that we deal with are global as well, and so that becomes a really important area to understand and to focus on. And I'll leave it at that because there's so much more that we can talk about on these topics.
Sure. We've covered quite a lot of ground already. We've talked about the big complexity of the problem, the speed of the problem. We've talked about some of the technology trends that can help solve the problem, but then technology trends like crypto that probably are making the problem slightly worse. So to close, this is going to be my last question, and would love your thoughts on some trends or predictions for the years to come that you would like to see unfold, or technologies you'd like to see scale. So just open-ended, would love your thoughts on that. And then Peter, maybe you can start us off.
Sure. A few thoughts to share here. Maybe in the shorter term, we've made real material progress here in Canada in terms of the regulatory space. If you look at the recent introduction of the Retail Payments Activities Act, this will put our colleagues at the Bank of Canada clearly in the driver's seat in terms of regulating payment service providers in Canada. So, evolution in regulatory oversight. These are big building blocks that are going to help us move forward. So that's a big thing in the next few years. Similar to an earlier answer, I look forward to innovation around our tech. Right? How can we further individually and collectively mitigate financial crime? I'm talking about the evolution of things like biometrics and blockchain, machine learning and AI, data encryption, centralized solution, network effective data. Lots to do there in the coming years, and there's a lot of value that we can extract from that process. So lots to look forward to, and I'm really excited to be a part of it.
Absolutely. Jason, what about your thoughts?
Yeah, and I'm interestingly, I've been watching the debates on vaccine passports right from the get-go last March, and I knew that it would get to a point where governments would have to face into the quite difficult question of how do you identify your citizens and how do you want to, track them. And that I think that in the past there's been quite interesting debates around civil liberties and national ID schemes in the UK that didn't get off the ground. But ultimately, IDing people in lots of places in organisations still comes down to name, address, date of birth, passwords, static data that can be stolen. So I think more immediately, I'm just interested in how the ID debate becomes a little bit more mature, and because it's got to become about your face, your voice, your device, and your behaviour. And if organisations can start sharing that, and let's face it, governments do already hold some of that information, and banks do, but to actually build a national ID database is something that's surely got to improve security for all of us, and move away from the fact that our data is inevitably in the hands of criminals and being misused. So I think that in the next 12 or 18 months, I expect there to be some quite interesting conversations about electronic ID and what that really means, and the true pros and cons of it.
definitely going to be an interesting one to watch. David,
Yeah, so
what about you?
yeah, I don't see digital currencies going away. I don't see crypto going away. I don't see blockchain going away. So all those things are going to accelerate. I don't see real-time payments going away. So we know that those environments and those constructs are only going to accelerate and proliferate. So we need to be able to respond to that because we know that's coming. So whatever environment we face today, it's going to become more complex. So the ability to understand how to do analytics in a blockchain environment, so blockchain analytics and those sorts of things, and apply them to these outputs of mitigating financial crime is an area that we've been investing in for quite some years and have a number of patents there. So linking up the ability to track and trace between fiat and crypto is going to become really critical areas that we're also investing pretty heavily in. And then to Jason's point about digital ID, it's another significant sort of practice area for Mastercard. We have a lot of initiatives, inorganic and organic. We've made a number of acquisitions in that space in recent years, specifically to drive a digital ID capability, because frankly, with an appropriate digital ID, you can apply it to KYC at account opening. You can also apply it to KYC on an ongoing basis. The account was opened perfectly normally, but I was convinced by someone to sell my credentials, and what was a perfectly normal account that was operating perfectly normal for many, many years is now a criminal account for money mules and for muling money. So, digital ID can be applied all sorts of different ways, which needs to be done obviously in a privacy-friendly, secure environment where the consumer and the business feel comfortable, right, in providing or enabling or allowing their data, because it's our collective data, right? My data is mine, your data is yours. And that's another conversation that's sort of unfolding as well, is who has access to the data, who owns the data, and who has right to control it. And so that all needs to be integrated into the platforms that enable digital identification, which again is something that we recognize and that we're investing in as well, because it is a critical enabler and it will help us significantly to stop financial crime. So a lot of work to do, a lot of work's being done. And I think across industry, we see that people recognize the challenges we face, and we're gearing up to fight them together, collectively, and for the better. So it's exciting times ahead to stop crime, but we can't rest.
Couldn't agree more. Exciting times ahead. Thank you so much, Peter, David, Jason, for your contributions. It's been a rich conversation. Appreciate your time. Thank you, everyone, for joining.
Great. Thank you very much.
Thank you.